Here we go. Right. Over to you, Lord Marland.
Where shall I go? The end there? Come and sit down, mate. Oh, please. No, you sit there. No, you come in here, one of you. Am I mic'd up? Yes, I am. Hello. Again, everybody. And welcome and well done for keeping awake. Amazing achievement. But there's one of our principal sponsors, Jim Ovia. I mentioned you earlier, Jim. I thought you'd be in bed, but apparently you're here, which is fantastic to see you. Thank you very much indeed for everything you've done and supporting us. And great to see you. This session is fascinating because we have two big hitters in the room. We've got the chief executive, none other than of Rio Tinto. It used to be called Rio Tinto Zinc in the old days. And I declare an interest. I'm a shareholder, by the way, Jakob.
Excellent.
Jakob Stausholm, who, I was talking to your chief of staff. She said she's run off her feet by all the travel and outreach that you do, covering so many countries of your major global business. And then, of course, we have bright Okogu, who is at the very center of the World Trade Organization, and before that was at the African Development Bank, and a major figure there who are long-term friends of the Commonwealth and our organization. I think we'll start this proceedings by just talking a little bit about the geopolitical tensions that exist in delivering a supply chain. I mean, Jakob, starting with you, you have to start thinking about 15 years ahead for your next project. And it must be, I mean, I'm in the property development business sometimes, and I get absolutely maddened by you think you're going to build something, and during that time you get taxed more, you have regulation thrown in, you have governments taking different attitudes to the business, and now we have a really interesting world with geopolitical tensions, which must make life very uncomfortable for you, where a lot of countries are retreating from global trade in a post-COVID era. Just give us a little bit of insight into your thinking at the moment, the company's thinking.
Yeah, thank you, and thanks for the kind words, and very pleased that you are a shareholder of Rio Tinto. Allow me to start with the history, because sometimes, you understand the future by understanding the history. Later today, we actually have a book launch. We have just turned 150, and we have written a history book.
You've been chief executive since the beginning.
Not really, for 3 years only. But it's quite interesting, because when you go back, you realize that Rio Tinto have actually navigated through 2 world wars and things like that. So supply chain security has been a matter of importance also back in history. If you look at the post-Second World War development, you have seen a Western world that has developed. We have had, we were just talking about it, 3 decades of unlimited globalization, and people haven't thought too much about supply chain security because you just buy on the market. It's slightly different in the East. In the East, countries have tended to work more. Both the Japanese economic development and the Chinese economic development, the Korean economic development have focused more on building a strong supply chain. And I think that is what is happening now with the geopolitical tensions, that most countries have to think deeper about how do I make sure, how can I actually have an industry without having supply chain security?
Bright.
Thank you. It's good to see some old friends, old faces that I haven't seen in a few years. Good morning. And let me just declare that I don't own shares in Rio Tinto.
You can still
not too late.
And neither do I have real estate. But having said that, I think, yes, the global tension, we like to call it polycrisis. What we're facing today, COVID-19 is one dimension of it. We also have had the Russia-Ukraine war, and more recently, of course, newer areas of tension and wars. So these things have led to different nations wanting to be self-sufficient, to what we call reshoring, to bring production facilities from wherever they are globally back home, simply because they no longer trust that, that whatever they have, let's say in another country, is secure. The COVID-19 showed us, all of us, that really that was an unsustainable way to do business. If you have most of your supply sources concentrated in a particular area, and there is tension, or even a climate event that makes that area no longer able to supply you, you are going to be in real trouble. And this was observed in many, many areas, which led to many instances of countries encouraging their companies to produce at home, even though the classical trade theory tells you that this can only lead to a loss for everybody. You can't produce every single thing that you need for yourself, by yourself, in your country. But this is where we are, and it's led to these difficulties. Now, the issue with respect to how supply chains can be managed under such circumstances, we have in the WTO described it as a re-globalization, where you excuse me, where you spread where you spread your production facilities among more countries, including developing countries. So where you have lithium reserves in natural form in some country, it's good to invest in such a place, not simply to extract the raw lithium from there, but to do a bit of value addition, convert from raw materials to a little bit of value addition so these countries can actually see the benefit of this exchange and interaction. And I think this is what the current de-risking strategy of countries is likely in direction is going.
So this is the value chain, internal value chain. So Jakob, on the value chain issue, do you see some of the emerging markets that you're involved in, particularly in Africa, because, sorry, you cut me off somewhere. There we are, thank you. Particularly in Africa. Do you see that happening, given that we're in a world where interest rates are 5 times as high as they were before, that investment is not as abundant as it was? Do you see that there is going to be an acceleration of sort of internal value chain that Bright is talking about?
I think there clearly has been a massive change over the last 2 years here coming out of COVID. Ultimately, it's not really the private companies that determines that, it's societal choices. And you see some countries have been very good at building wealth from extraction by also having processing and further downstream activities. And some other countries have only extracted it and sent it to another country for processing. I would say the choice is for the individual country, and I do think that there's a lot of opportunities around in the Commonwealth, not just for extraction, because that's determined by geology, but also for processing. It is, though, important to say that at this point in time, with addressing climate change, you need not only the right geology, but you also need to find a way to get
Let's come to climate change in a minute, but I mean, you've hit on a very important subject. I mean, do you see, Bright, this, what you were talking about earlier, do you actually see it coming into effect, or do you think there'll be a 5-10 year pause whilst people either adjust to higher interest rates or that investment, the investment money, finance becomes available, and of course that inflation levels out?
Yeah. Well, thanks for that. I think the macroeconomic adjustment that's been going on globally is beginning to stabilize. Interest rates have gone high enough, many people would argue, course, central bankers may disagree because they're looking at inflation. But inflation has stabilized and is coming down in many of the jurisdictions. So what is likely to happen in this instance is that investments will start again to flow to countries because investors will see that the uncertainty about interest rates is being removed somehow as you go forward. Now, I have to say this, that the issue whether people will invest or should invest in these developing countries or poor countries where the raw materials are, I almost feel that it is inevitable. Because some of the narrative that you've been hearing is wrong narrative. The feeling that the risk is higher in these countries, therefore let's not go there to invest. The reality of it really is that if you look at the numbers, the returns from those countries are more than enough to compensate for the risk factor. So I do think that out of a sense of self-interest, investors are going to move towards the poorer countries where you have the natural resources. It may take a while, but you said 5 to 10 years. It may well be. But let them start now. I think the direction is what's important.
But a number of those countries, Jakob, obviously enhances the risk because they don't employ the same rule of law that some of the countries that you invest in. There isn't the clear-sightedness. In some cases, there's a fair amount of corruption and political uncertainty. We've seen the overthrow of several governments in Africa recently. I mean, this increases the risk to you. How do you quantify that when you're going to make an investment of this nature?
Yeah, first of all, if I may say, I in a way agree that you can make good business in many places, but there are always good investment proposals and less good, and it does require competences. So if you talk about extraction, it starts with being able to, for example, explore and develop projects. And then there is the whole country risk, which I tend to look at slightly different because we are operating in sometimes difficult countries, and yes, there has in a number of countries been a coup d'etat, etc. But nonetheless, if you think about it, if you create projects that are win-win in society's interest and in interest of the private enterprise, then you normally can find ways and means to work that. The way we manage risk is very often by joint venturing and often also working with the country in which we are operating so that you create as much win-win as possible, because you do need some stabilizers. And here's the key thing is you don't need stabilization for a year or two, you need it for decades. That's the problem. The problem with mining is you have to be very, very patient. For us as an investor, it typically takes 15 years before we start seeing revenue. But of course, for the country, you start getting benefits already year one because you start investing first in exploration and later building a project.
And it's all these ESG issues that we all know about, but particular, I think the thing that differentiates sort of Western countries from the Chinese, for example, is the skills transfer. And that, you're saying, has an immediate effect because you're starting to develop. And for us Commonwealthers, particularly in Africa, it's this alarming figure of 60% of the African population, actually 70% of the African population being under 30, and how you find jobs for them. And that presumably fits into very much your ESG thinking.
Oh, absolutely. But I do think that the whole global world nowadays, more and more, everyone, China is very committed as well to raise the bar on ESG matters. We joint venture with Chinese partners in some places. But I do think one thing that we certainly have learned is important for long-term success, and that's the local employment and use of local contractors. So we went into Mongolia, where we have just finalized building the world's 4th largest copper mine. And we promised the government to have 80% Mongolians, and actually right now we have 97%. It is impossible, even though there was no mining experience. It takes some effort to train people and to built a list of reliable smaller contractors. We are right now about to launch probably the world's largest mining project in Guinea in Africa, and it's the same.
And what are you mining there?
Iron ore here. It's going to be. There is a place called Simandou in the middle of Guinea. They have the highest grade iron ore on the planet. The only problem is you need to have a railway of 650 kilometers and build a port, etc. So the infrastructure is enormous, but it's a huge opportunity for Guinea. And the formula for us is to take the time it takes to train local people and get that to work and build it to the highest standard. The reality is we don't have a choice as a blue chip company. Whether we operate in Canada or in Australia and Guinea, international NGOs, they will look at and hold us to account to the same standards everywhere. But that's also where we can actually contribute something. If we can hold the right standard and create local employment.
So just as an example, let's take Guinea. You say there's a 650 kilometre railway. Will you be involved in building that railway?
Yeah, now it's a joint. It's a partnership with. We have 4 partners here, so we have a joint ownership. We don't build the railway, but we build the mine. So we each do.
So who funds the railway?
Well, we fund our part.
Right. So
Yeah.
4 of you will fund
Absolutely.
the 650 kilometre
Absolutely.
railway.
And
so you're
port.
bringing real infrastructure benefit
Yes,
to
and
the
it will be multi-user.
And the port will be similar?
Yes,
Or are
and
they-
it will be multi-user, so it can create other employment than just iron ore.
Yeah. And so this plays into the world trade.
Well, I went to Guinea a few years ago in my previous role in the African development. I went to a mission there. We went to the bauxite, maybe
Yes.
your place is near there. Beautiful road from Conakry all the way to, but the road stops exactly by where the mine is. Beyond that, there's absolutely nothing. So ESG, in my view, needs to go beyond this sort of, it wasn't by Rio Tinto, by the way, so I'm not talking about your company.
There's the Chinese, was it?
It's somebody, yes. It stops exactly there. And one of the road was quite good from Conakry to that point. But this is the old model of international business relationships. Because it's simply, what is it telling you? We're building this road infrastructure to get there, to extract this, take it to the port and take away. What I think the world is looking at now is this value chain issue. To be able to process some of this raw material within Guinea, create jobs, government will get more taxes. They can build their own roads beyond that little village where this thing ends. And I think that is proper ESG because the social dimension of it is going to become very manifest to everybody. All the citizens will see something is going on. I hope that the rail, because I don't know the location, it's not going to be of a similar arrangement where we just go get the raw material, bring it to the port, and off you go type of thing.
Let's come back to this subject you touched upon, Jakob, of climate change. You know, it is now critical. Actually, it's ironic that we're having this event with COP taking place and all sorts of oil deals being done with the UAE and visitors to the country, so I read in the press this morning. But how much part now does the climate change and sustainability issue play in your decision making and thinking? Because, I mean, clearly you're building 650 kilometres of rail. It's going to a port. It'll then be shipped somewhere, and you know that isn't actually good for a global footprint. But it is something that you have to talk to your shareholders about and talk to the outside world to justify your development. So just talk us through what's the dynamic that goes on within Rio Tinto on that subject.
Look, I would argue that climate change is at the heart of our strategy, at the heart of everything we do. And if I should just start with that little example of Guinea, the fact is that you can extract iron ore that has a grade of 66, 70% is pure iron ore. 66 means that there's very little impurities. Elsewhere, very often you extract at 55, 58. In Australia, you have high grade at 62. But the fact that you can extract the highest grade means that you will use much less energy and you will have much less CO2 emissions. So you're actually creating a better world by extracting the high grade rather than the low grade. So that's one example of it. But what I would like to say on this thing, first of all, yes, and I'm going myself later this week to Dubai, to COP28. It's very disappointing. 28 years in a row, we haven't really moved the dial. Fossil fuel is still 82% of the world's energy usage. But it's not a matter of phasing out fossil fuel, it's a matter of creating an alternative. And addressing climate change is fundamentally about building a new energy system. It's a very physical thing about creating electrification and renewable energy. And that will require a lot more materials that we are producing, a lot more copper, a lot more aluminium, and a lot more battery materials. So it's an opportunity, not just for Rio Tinto, but for a number of Commonwealth countries who actually has the geology, partly starting with the extraction, but as you rightly say so, trying to build a more integrated supply chain processing and further downstream activities.
And of course, Bright, the issue of trade does mean transportation, and that is not, as I said earlier, necessarily good for the carbon footprint. I mean, what's the WTO's position on all this?
Well, thank you. We are working
Tenet, more to the point.
We are working it. I mean, you are right. I mean, if you're doing trade, you've got to move goods from where they are produced to where they are needed. So certainly that would involve the carbon footprint, increasing. And this has been happening. But we like to see the other way, that trade is part of the solution to all of this. Because what are the things we need to solve the climate change problem? You need to be able to move equipment, if you like, renewable energy type of products from one location to another. If you don't have that, you're not going to be able to solve the climate change or the carbon, net zero carbon problem. Absolutely, there will be nothing happening. So to the extent that it is, we are, for example, in touch with the shipping industry. You mentioned Maersk earlier. We have many of them who come to us. We've convened them using our convening power to engage with them. Green hydrogen is being developed. And they themselves were very pleased that we provided a forum for them to exchange ideas on how best to transition from current bunker fuel type, which contributes to increasing the carbon emissions, to transition into hydrogen type means of moving goods by ship. So if you take this aspect of it, you then see how trade becomes, they are greening, if you like, their own transportation, their own mechanisms for moving goods and goods in particular. And we are working with them to ensure that some of that transition doesn't involve inadvertently putting a higher tariff, for example, on goods that are renewable in nature as far as energy is concerned. And that is a major part of the discussions we have at the WTO on how to ensure that markets are open and you encourage trade in those types of areas for goods that will get us to net zero. Let me just say one small thing with respect to the trajectory we are on now. The studies done recently have indicated that we are not on track to meet 2 degrees Celsius above the pre-industrial level that was projected. Never mind going to 1.5 degrees Celsius, which is even more severe. And the way that trade is essentially coming into this is exactly what I just mentioned. To have very low duties and tariffs on renewables, solar panels and things of that type that will enable this transition to take place the way we want it.
Well, the solar panels aren't going to be much use in this country. I don't know if you came here by car this morning or
I walked, actually.
Yeah, well, but obviously in Africa. Sorry, Jakob.
I just wanted to make one point. I mean, we need to solve the challenge of transport in everything. I get that. But if you look at the numbers, it's not transport that's the biggest issue around emission. It is actually producing stuff, producing all this stuff. Everything you see around here comes from extractions and manufacturing. And that's a much, much larger basket. So often you actually have an emission by moving things from a mining country to a consuming country, but that CO2 emission is very small compared to how you do the manufacturing, whether you do that with fossil fuel or you do it with renewable energy. I'm not saying we shouldn't solve shipping. I think there is a solution in the future, probably with ammonia or something like that, and there might be some biofuels in between. But the real big issue is to solve the energy in manufacturing. That is what can make the biggest difference.
And your point, I was Minister for Energy and Climate Change, so I understand the importance of transition, which seems to have gone out of the window, but we'll get on from there. So lastly, because I think I'm getting the eye that we've nearly look, you can see some of them chomping at the bit for lunch. I mean, Bright, predicting ahead, do you see world trade going back to the boom times that has happened in the last 10, 15 years, before COVID, before Ukraine, now before Middle East? Or do you see it plateauing for a while and then accelerating? What's your sort of prediction?
It's a very difficult question because...
Well, it's not meant to be easy, you know.
What we had predicted, what we forecast for trade this year was a 1.7% growth for trade in 2023. We had to revise it just a few months ago to 0.8% growth, which is essentially playing into the point you were making, that how do we see it going forward? What has happened is that there's a little bit of indication of what you can call this fragmentation is what we call it. Some element of it is beginning to show. But I personally think that this is a temporary adjustment phase because we're just recovering from the COVID situation. And I think that once COVID situation is fully recovered from, if you look at the trade relationship between the EU and China and between the US and China, the numbers are still very high. They're not going down because this was the fear with respect to fragmentation. So I think politicians on one side, you said you were a politician?
No. I gave that up a while ago.
So politicians have one particular trajectory, the way they're thinking about it. But businesses, if you look at the numbers, you're actually seeing it's slightly different from what politicians see. So I'm optimistic that people will look at the benefits of trade and free trade and begin to talk to each other on how to resolve the differences. Differences among human beings will always be there. Will always be there. It is how you manage that particular thing, and I think I'm optimistic for the future.
Jakob, are you optimistic for the future of...
Look, it's very difficult to predict how trade will develop between a number of developing countries, but it's quite given that trade can be so beneficial for developing countries. You need, it's absolutely crucial. Obviously, it has to be fair trade, and I'm absolutely convinced the growth opportunities in Africa can, for example, only be unleashed if there is a growth in trade as well. And defining that trade pattern and fair trade pattern and making sure that there's sufficient manufacturing in different parts of the world is going to be crucial. I think that that a pathway will be found. And if I was not optimistic about that question, I would not be optimistic about country developing. So yes, I am.
Good. Well, and of course we have in this room representatives from some of the countries where they are growing. Cameroon, Bangladesh, Uganda, Kenya is growing again, Sri Lanka, just to name a few of countries and Singapore, which seems to go on endlessly. So there is hope, and it's very good that you could end on a message of hope, because without trade, you don't lift countries out of poverty. Without the value chain, you don't increase countries' prosperity. And without ESG and skills transfer, you don't educate a nation. So those are three very positive things. Anyway, it's a huge privilege to have had you two with us. Thank you both for sparing the time.
Thank you.
And we look forward to following your careers with interest.
Thank you.
Thank you.
Thank you very much.
Thank you, Lord Marland. There is hope. And for those of you who've been hoping for lunch, I have very good news. It starts now. We will be back here in 1 hour for the next plenary on digital transformation, accelerating global health coverage. And for those of you who are participating in the roundtable on education technologies, skilling the future, that is in the courtroom, which is upstairs. That's it from us for now. Enjoy your lunch. Thank you again to Lord Marland, to Jakob, and to Bright for an excellent discussion.
Thank you.
See you in an hour.